Hey everyone, here's a new video about the Ultra Bonds algo, and this time we're going to talk about how to trade the signals of this algorithm, the long signals, the short signals, and we're going to talk a little bit about how we can see in what kind of state the market is. But first I want you guys to look at the risk disclosure when trading futures, right? Futures market trading is risky, and these are some standard risk disclosures I want you guys to check. You can pause this video and read them carefully. It's important to know what the risk is when you're trading futures. So please pay attention to them and let us continue with the video. So some basic rules. We got the algo over here, right? This is what we see. We got our bars, our candles, these are colored, so green, gray and red. And we got our signals over here. And we also see a cloud below and above the price. And important element on the chart is a 200 SMA. Simple rules when looking at the market. Let me directly start. In this case, we see the price on top of this red 200 SMA. Price and the cloud is very tight on top of this 200 SMA. Here it's below, but it's very close to the 200. Many pro traders, stock traders, index traders, bond traders, they call this a narrow market. The market is narrow and it's setting up to extend, to widen. And many times these waves, these breathing waves, breathing in, breathing out, let's call this breathing in, and market here is widening, it's breathing out, and then we see the market moving back to the 200, a narrow market again here. This is very important for you guys and a very simple way to look at every market, not only bonds. This rule applies to every market, how you can look at it. So this was London this morning, right? We were in a narrow market and price tried to widen, to extend, move away. The cloud is moving away from the 200. We also got the session VWAP over here, which is part of the indicator. Pullback and more widening. That is what we see over here, right? Okay. And then of course we got our signals. What kind of signals do we trade and why? Very simple. I wrote it down here on the chart for you guys. As long as the cloud and the price is above the 200 and is widening, we are looking for long signals. We are not looking for short signals when we are above the 200. When price is below the 200, we look for short signals when price and cloud is below. Okay, so market example. Here we got a long signal. We had the London open, retracement, price was widening, market was widening, right? Wider market. Here we got the long signal. Okay, and then how do we enter this? It's important when there's a signal, we look for longs. We don't take this short because it's above the 200 SMA. We look for the longs. We enter only on green candles. The price needs to continue after this signal. If we see the signal and we see gray candles like here, for example, here's also a good example, pretty much directly after the signal we get gray candles. You wait for new structure to form. Price needs to continue in same color. Here, for example, a short signal with red candles. Of course, this is above, we only take them below, but here's a good sample and here's an example, and these are all good examples. So, long signals. Use a stop loss of around 3 ticks and a take profit for around 6 ticks. You can do 4 ticks or 5 ticks, also good. That's all up to you. Or you can trail your stop from 4 or 5 ticks if you want, so you can take more profit, bigger runs. But 6 ticks is very easy to take on ultra bonds. So as soon as you are in profit with your trade is running in profit, move your stop to break even. If you are 3 ticks in profit, move your stop to break even. Because you don't want a winning trade, it's moving in your favor. You don't want it to move against you. Never let a winning trade become a losing trade. Okay, then there is a counter trade possibility, because in this case, I'm going to show you an example. Price went from a narrow state to a wide state. It was very wide. And here we had a short signal. First one, we don't take it. But this is telling us price might set up for going back to the narrow state, moving back towards the 200 SMA. This was the second signal. And when I get 2 signals, or maybe 3 on the second and third signal, I might think, okay, this is interesting to scalp it back to the narrow state, but use it only from the second or third signal, and use a smaller take profit because the moves can be smaller. These waves are larger than the counter waves, and use it with at least half of your normal position size. So these trades are higher risk because they are above the 200 and we are in a widening state, we are trending up. This can be a correction. This does not have to be a complete new trend, a rotation. It's possible. So here we go. Price is below the 200 SMA. We don't look for longs. We look for shorts. And why don't we see a signal here? That's very interesting. The main reason is we don't see a signal here because this blue line here is a daily pivot. We have this filter in the algo. You can set it on or off. You can filter out signals 2-3 ticks around the daily pivot, because a daily pivot, price can really range around a daily pivot. So in this case I have set it off. I believe I also had the signals off for the session VWAP. And now price is again above 200 SMA. We look for longs, and this thing we take. This thing you might take also. We went for narrow, try to break free. There was no real follow-up. These shorts you don't take. And here again, new opportunity for longs. Okay. These are very simple examples on how to trade these setups. I'm going to show you guys some more examples. Let's go back to here. This was yesterday, end of New York. We were in a very trending market. Example, wide, all short possibilities. Back to the narrow state. Okay, we are below. We are widening again. Take the short signals. Take the short signals. See, very trending markets, not hard to trade. And we went from wide directly back to narrow. See? Long signal, maybe you don't want this one because it's very close to the 200, narrow state, same like this. This one worked out, this one not. This is a good signal. So, some examples. Yesterday we had very trending markets. Same example here. Oh. New York stock open. You can take these ones if you like, but they're higher risk. We're looking for shorts, right? Short, 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 short. There's no algo that can give you 100% winning trades. It's impossible. But when you use Renko charts, Renko bricks, this is 1 tick per brick. We use the free Ninja Renko, free from Ninja website. We use these Renko bars, 1 tick per bar. It gives you a lot of opportunities to trade the trends, to trade even the smaller trends. And yeah, that's about it, guys. Again, back to our notes. Here we got them. Take a look at them. Price above the cloud, 200 SMA, long signals. Price and cloud below the 200 SMA, short. 3 tick stop loss, 6 ticks for TP. You can also trail the stop. Move stop to break even when you're like 3 ticks in profit. And never let a winning trade become a losing trade. Counter trade information we got over here. Again, it's important when you see the signal that you have confirming color candles. Price needs to move on in the same direction the signal has. So that's about it. And I hope you guys liked the video. Let me know what you think at the YouTube channel. And I see you in the next video.